elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground still. Small channel, big value, all right? We're going to be talking about and looking at a stock in the actual solar EV space, all right? This was a requested ticker from one of my Patreon members. As usual, it'll go on the Patreon first and then find its way on YouTube later. So if you're new here to the channel, we specialize in growth investing, more in the mid and small cap arena, to capture the attempt to capture those big, great opportunities that can realize exponential gains. All right. So if that's your thing, consider subscribing. All right. We're going to be taking a look at Optera Motors Corporation, ticker SEV. This trades on the NASDAQ for $2.81 a share. These are Class B shares. Market cap is 91.28 million. What are they? What do they do? Where are they headquartered? So they're located in Carlsbad, California. All right, getting those Silicon Valley vibes. All right, this is a consumer discretionary automobile manufacturer, and their main product offering, well, they're offering it, but they haven't launched it yet, which we'll take a look at the business model here in a bit. But essentially, the idea is they're creating a solar vehicle, one that will not require charging, okay, and is powered by the sun. Now, right now, their initial SKU model has a plug-in charger, just in case for hybrid use from solar to electric battery. But for all extents and purposes, this car has solar panels on the roof that cover the vehicle, and charging happens from the sun. All right. Let's take a look at their balance sheet and look at how they're standing so far. 1.47 million in debt, 9.61 million in cash. Enterprise value is 83.14 million. Going to the financial statements, as you can see here, this is a pre-sales company, which means they don't have revenue, they don't have sales yet. All right. So we're at that particular phase in the company, and I'll explain their actual story, or generalize their actual story, and then I'll address some things to some of those earlier investors, okay, which we might have a little heart to heart, okay, in the actual video. Dilution from these actual years is impressive at a limited dilutive weight. As far as CAGR on their dilution rate year over year from 2022. But don't let that fool you. There's a lot of capital that needs to be raised so that this company can execute upon what their actual vision is, and that being an actual clean energy vehicle that will provide freedom from your gas station and electric charging and all that stuff. All right. Let's look at how much cash they're burning. Their cash burn rate on a net income basis is going down, I'll admit, but with the actual liquidity and how the stock is functioning on the market, I see the equity taking huge dilutional capital hits, and earlier investors have probably already experienced that, painfully so, I'm afraid. Net income on a quarterly basis, they lost 15.5 million on a net income base, but sprang a little bit of positive free cash flow. All right. So that's something to consider. We'll go to their profitability metrics. As you can see, it's blank. All right. And that's where you, as the investor, have to project out and fill in the blanks. It's a story, all right? So whenever you're looking at a pre-revenue company, it's a story, it's a book, and you have to read the book and the story and fill in the blanks yourself. All right, and that's what's going to separate highly skilled investors from your actual just regular investors that a lot of them don't know what they're doing. All right, so it is what it is. All right, so let's take a look at the business model. All right, this is what the car looks like. All right, it's a tri vehicle, so automotive industry is gonna and actual regulatory bodies is probably gonna classify this as a motorcycle. Okay, just right off the top of my head, that's just how it works. Motorcycles have less regulatory red tape that they have to go through. Hence why I'm probably thinking that the company went with a three-wheel concept. Um, I can dig three wheels, all right. If you have a four-wheel vehicle, one wheel goes down, vehicle can't drive. Less wheels, probably the better. All right. Um, in some points of view at least. All right. So there's that to consider. Um, so let's take a look at what is happening. Okay, as far as market demand. So they have 49,000 reservations and they've already secured 20K in invested equity investments on average. So they did that's another way of saying they did a crowdfunding raise, all right? And they have different seed tiers of crowdfunding and so forth, all right? And we'll talk a little bit about that as well, all right? So the average price of one of these vehicles, okay, is about 40 grand. If you get the one with all the bells and whistles, it's like 50 grand, okay? After, let's say you get a standard base model that's 40 grand, maybe you pay 50 grand, shipping and handling, taxes, all that good stuff is probably going to come out to maybe 50 grand or a little bit shy thereof. And that might include some bells and whistles. So I'm guesstimating that. $100 due today. That is actually the reference to these orders, these $49,000 reservations. So 49,000 people um, put $100 down and actually went through the checkout and put a reservation on their order. Okay. So this target price here, you know, that's the actual target price. And of course, they'll do a sales pitch of you're going to save this much amount in fuel and this and that. But all in all, right now where they stand as a company, they're not able to deliver on the actual orders right now because they don't have a production facility, at least to reach that demand of scale. Right now, they're at a phase where they're headquartered in California, and then right there, they have an actual blueprint assembly line where actual people are putting the cars together from one lane to the next, from the next you know assembly line of physically putting the car together. So what that essentially models is the blueprint, and they're taking notes on what they need for when they actually create a new manufacturing facility that's automated by robotics, putting the cars together, just like all the other car companies. Okay, how much money is that going to cost? Well, company quotes maybe 60 million. I think they're going to have to raise more capital. I see them having to raise probably a couple 100 million to get this up and running. As far as manufacturing facility, increased SG&A, as far as you got to hire some employees to run that facility. Maybe you buy or lease the building. You got to get the actual cost of goods, which are the materials for the car, the initial cost of goods for the materials for their initial batch SKUs of cars that they're going to try to launch out and so forth. Um, Here's the management team. All right, here's the leadership team. These are two co-founders. From what I understand, this company is pretty active on YouTube. They have the background. There's some Tesla employees on there and some automobile background people on there. So there's that. A little bit older. Okay, these are older wigs. So, I like my management teams to be fairly young. I like the co-founders to be fairly young, more in the, 30, 40-year-old range. These gentlemen, no offense, they look like they're probably in their 50s, 60s. So, there's that to consider. Um, so let's talk about some stuff, all right? 10K. All right, I've done the 10K analysis. Class B shares, which are on their actual market right now. And I know it doesn't say it right here on Seeking Alpha, but these SEVs, these are the SEV stock, which trades on the NASDAQ. These are Class B shares. All of these Class B shares have non voting structure rights. So if you're buying stock here on the open market for their Class B shares, you don't have no voting power rights. Um, with the analysis, they all participate, but all the shares participate just like regular Class A shares. Okay, as far as the economics, they share in the same profits and so forth. All right, but the only difference is the non-voting portion. All right. So that's something to consider. Something else that I caught on the 10K is the board of directors intend to issue out preferred share stock units. And preferred share stock units are pretty much hybrid units that yield. So when you go to the income statement, you'll go to this portion right here under the net income. Your preferred share units will be listed right here. So when they issue out preferred shares, you're going to see a deduction off net income and it'll create an actual loss. And those preferred shares are paid through the actual sales and deducted off the net income and paid for off the net income, unlike common share dividends, which are used through free cash flow and cash flow statements. All right, so that's something to consider. That's a deal breaker for me personally. So, just disclosure. And another disclosure, I am not invested into this stock. All right. There's the portfolio right here, transparency purposes. Um, that hot stock pick right there for my Patreon only. I assure that's not SEV shares right there, okay? That's something else. That's a hot stock pick just for my Patreon, all right? My last hot stock pick was IBRX and Arrow. And, my Patreon's eating good off that, all right? But but that's it. I'm not a shareholder of this company, so take it for what it is, all right? So, what do I think about? First of all, let's go back to the story, all right? So, this company, they did the crowdfunding raise, and if I'm sure there's probably some investors that are looking at this video right now that participated in that. And those investors are down dramatically. And, the company was supposed to launch their SKU vehicle onto the market for their first sales in 2019. COVID hit and a bunch of stuff happened, which totally derailed their execution timeline to where now they're looking at the end of 2026 to launch for their first sales. Um, so there's that. That's pretty much the story. Okay, so initial early shareholders that came in, they have probably, for example, they're probably down. Their shares are probably worth a tenth. If they're lucky, they're worth a tenth of what they were when they bought. Okay. Um, what do I think about that? All right, and whose fault is that? All right. It's those shareholders' fault. If you bought stock in this in 2022, all right, or 2019 or whatever, and you participated in some of those crowdfunding seed rounds, and you're over here blaming the company, I wouldn't. That's y'all's fault. All right, y'all didn't understand actual, executional phase timelines of S curves. and you were not able to fill in the blanks here and project out properly, and you were not able to assess management, trust, and execution capabilities, and so forth. All right. So, no offense, but that's y'all's fault. All right. So, but there's a silver lining here. All right. If you take accountability for it and you learn from it and you move forward, you understand all these things now. Through that actual pain and suffering equals wisdom. Now you got it. All right. You got the wisdom. All right. And however much you lost is how much that wisdom cost. All right. I'll say it again. However much you're down and you lost is how much the wisdom costs, and you lost time. All right. If you still own your shares now, good on you. All right. Good on you. That means you actually believe in the company and so forth. Or you're just bag holding and hoping it just comes up. All right. So hit the thumbs up button if you're getting value out of this, even if you're one of those people where I said that's y'all's fault. All right. If you want to learn, if you learned from it and you took accountability and you want to join the crowd of winners, consider joining my Patreon. I teach all my members all about this stuff. And you know, I actually guide the Patreon members, and I could see this stuff coming around the corner, so I'm able to help them avoid stepping into crap like that. All right. So there that is. You get more direct access to me. You get exclusive content. I teach you about how to do pretty much all of this stuff, how to build positions properly, assessing risk and reward. You get a community of like-minded investors, access to hundreds of videos of exclusive content. $14.99 a month, really can't beat it. I know it looks suspiciously like $15 a month. Press this button right here, pay one time annually, and then, get a 20% off discount. All right. So going back to it as I digress, is this a good investment or is it not? So so here's the thing, guys. All right. Um, with the actual 10K analysis and the Class B shareholders holding no voting rights, and the company owning 45% of insider ownership, and the actual stock-based comp plan of RSU units on the actual 10K, and the board of directors' intent to share preferred shares, I don't trust the management team. So I don't agree with the setup. I don't trust the management team. Therefore, I'm out. I would not buy this stock. That doesn't necessarily mean it can't be a good investment. It can 10x. But if the ground isn't right to where there's no trust, I'm not investing. All right. It's just as simple as that. It's my money. All right. And I actually, to get an investment out of me, I deploy my capital very carefully. All right. With patience and well-timed aggression. I assess it. I assess when the S curve is coming. I look at the setup. I look at management capability. I assess trust levels. I assess total addressable market, IP and tech valuation. I get into all of that stuff. You know, there's no doubt that the demand is there and the economics of the product works. But the execution and shareholder trust I assess is an issue right here in this actual equity. All right. Um, I think there's other plays out there where you can multi-bag exponentially and have a good investor relationship with the management team. But I mean, this is not one of those. But let's pull up the math proposition of the numbers of future projections. I'll give you a little bit of taste of that. All right. So if they secured those 49,000, all right, if they got 49,000 reservations, and let's say all of them come through, there's probably going to be some people that buy on the fly too, all right? Let's say that they sell a vehicle for 45,000 each. 2.2 billion in sales. I project probably within 5 years with good execution, and that incorporates a new manufacturing facility, equity raise, I'm projecting they're probably going to have to raise anywhere from $500 million, 500 million to 700 million of equity raise dilution to build out the factory, hire the employees, get the cost of goods, and project it out. The actual concept of growth that I project, or how I see growth, is you think of a farmer. If a farmer starts a garden or whatever, they're going to break up the soil and the season has to be right. All right. They went into a bad season. However, that does not exclude them from accountability of execution. I assess they probably could have sold a vehicle or been in sales now over these past couple years. All right. So there's that. I think the season is right. We have high gasoline prices. We got war. They're on the actual market of equity setup. They can raise capital and actually execute upon the $2.2 billion potential of sales I project in 5 years. Stock can go back up to $10. It's possible, but without that trust, I can find multi bags elsewhere. And if I trust the management team, I can hold for a very long time. All right. So, um, do I think that they'll execute properly? I don't think they will. I think the stock just lingers, but that's just me, my personal humble opinion. I could be wrong. Either way, I won't be interested either way because I don't trust the management team and the shareholder setup. All right, I hope you guys got value out of this. Check out that Patreon, hit the subscribe button. I appreciate all y'all support. I know it was a little hard on those other earlier shareholders of Sev, but I always keep it real and I'm honest. All right. So with that being said, take it easy and have a good day.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.